Hi, welcome to this video update, which is on the 17th of August, it's Saturday. We're just going to be looking at a very simple trend trading strategy that anyone can use to catch really big profits from big trends in the market. And I'm going to illustrate it today with USD SGD. First started illustrating this strategy with AUD CAD and NZD CAD. Briefly update those pairs. They're up well over 500 pips between the two of them. USD SGD, good profits in this pair as well, but plenty more to come. The strategy is extremely simple, yet hardly any Forex traders use it, and I'll explain why when we get to the charts. And that's what we're going to do right now. So just before we do look at the trade setups, just keep in mind it's my view as of this moment in time. It can of course change in line with the market conditions. If you want all our trading techniques, our daily technical and sentiment analysis of 14 Forex pairs, you can get live access to our member centre on the link beneath this video. Right, let's take a look at the charts and the logic of the strategy. Just on the USD against the SGD, this is the monthly chart, just very quickly, so I can set my target on this chart. You can't see it on the daily chart, and also see the significant monthly levels if they back up the daily levels. If they do, those levels are more valid for us. Now, just very quickly, how this chart has evolved. We're obviously based out here, break above the 20-month moving average, and we kind of travel sideways to hold it. Now we're pushing off, and we've taken out the two previous months' bodies. Okay. Now, in terms of a breakout, we're looking for a breakout above this level here. So you've got that double monthly top, and we're just sitting below it. So it's just below the 139 level. If we break to the upside, then we think we'll move very quickly to 145. Okay, so there's a really good risk reward to the first target, but I'll explain the logic behind this in a moment. We could easily run back to the 2008 highs at 155, so 650 pips to the first target, 1,650 pips a second. Obviously, it's got to come to fruition, and risk to stop on this one is just not very big. So you've got really skewed risk to reward. And let's go to the daily chart, draw exact levels of entry, stop, and target, and the logic behind this trade. Right, USD SGD daily chart. I'll just draw my levels in a moment, but in terms of behind the chart, we just do a simple 4-point checklist. We want one currency to have clear-cut advantage over the other on all 4 points, and that's exactly what we've got here. Bearish Singapore fundamental dollar, bearish fundamentals for the Singapore dollar. Interest rates, they're going to be eased soon in Singapore due to the economy is just about to go into recession. US dollar holds the interest rate advantage at this moment in time and will do so going forward. Domestic economy, US economy doing far better than Singapore. And here, it's Singapore's heavy dependence on exports. If we take the US economy, it's not so dependent. 70% US GDP is internal, it's the consumer. It's only around, I think, 32% in Singapore. So it's much more reliant on exports. So you look at the trading partner impact. Every trading partner that Singapore has, a major one, is just slowing up quickly. The slow ups in the trading partners just getting worse. China being the major one. Then you've got other nations like South Korea and Taiwan. Look at this export data here. 17.3% drop in June. July was 11.1% drop. It's nearly 30% in a couple of months. Just not looking good for Singapore. We're looking in point number 4, geopolitical situation. Could there be a geopolitical problem or an impact? So a good example would be Brexit and British pound pairs. We don't have that in this pair. So it comes down to the personality of the currency. We are in a kind of period of risk aversion. Global growth is slowing. The US dollar is the second safe haven behind the yen, and the Singapore dollar is a risk currency. So we've got safe over risk, which is a kind of strategy that we've been using a lot in recent months, particularly in terms of just buying the Japanese yen, which has done really well for us. So here, dollar has the edge as the safe currency. This point should be kept in mind by all traders. I did it in a video the other day, actually. I'm just going to repeat it. Trading in pairs with less speculative interest very often offer the best risk-reward trading opportunities from one of the great traders of all time, Bruce Kovner. Why? Because in the less looked at pairs, if you've got less speculative interest, you're going to have less noise, less price spikes. You're not going to have, algorithms, flying the price all over the place to, take retail traders' stops. You're going to get a smoother trend. So they're very often really great risk-reward trading opportunities. And this one looks really good to us. 138 is good support, and that's good support on the monthly chart as well. 139 is the level we saw on the monthly chart, and if this level gives way, just draw another line in, then I think we'll be off to the upside. Now, if you're coming in fresh to this trade, 139.30, so get well clear of the round number. There's always big order flow around round numbers. I say this all the time. You want the battle to be resolved in your favor. Okay, 139.30. Stop back behind the 138 level, another round number. Also, this 20-day moving average. In terms of, we say this frequently, if you have a big trend, you very often find the 20-day moving average will act as a level of support in an uptrend. So you don't be behind the first level here. You want to be behind the second, and I think we'll take that big blue and the two bodies there. So 137.70, 139.30 in, as I see the chart right now. Say you've got 170 odd pips, 160 pips in terms of risk against 650 to first target, and if the second target was hit, obviously you're 1,600. In terms of just one final point, if we did come back to the 138 level and the 20-day moving average, you could just key off that on strength. I mean, so far for us, in this pair, we came in at 136.30, just a couple of hundred pips so far, but I've got a feeling we could do much more on the upside. Now, in terms of doing this kind of trading, just with the big fundamentals checklist and then simple technicals to manage your trade, AUD, CAD and NZD CAD, I mentioned them at the start of this video. We used them as illustrations a little while ago. Good profits in them, and I think more to come. I'll just take a quick look at them as well, and we'll do, which one should we do first? We'll do AUD CAD first. Right, on the AUD against the CAD, and this one's done quite nicely, just up over 300 pips, and it's just done with that simple checklist. Interest rates clearly favour Canada both now and going forward. Domestic economy, clear from the data, Canada is doing a lot better than Australia and New Zealand. And if we look at the export partners, basically Canada, major trading partner, the US economy doing relatively well, particularly when you compare it to China, where obviously New Zealand and Australia have their major exports going to. China obviously really slowing up fast. So those 3 points obviously favour the CAD. And then we've got, basically risk v safe. Well, the Canadian dollar is seen as the safest of the three. So pretty simple. Come down quite nicely. Have a little rally here above the 20, but we had our stop well back from the round number. Nice move down. Now a bit of sideways. Pulled the stop in pretty tight just to lock a profit. But if we were stopped out, we'd just look to sell any weakness off the 91 level, or if we got away from it, back through the 20-day moving average. So rally would be a selling opportunity. What about if we break lower? I think if we break here, we'll probably go and target this spike low. If you're coming in fresh, you might want to wait for the break of the spike low, 88.70, then stick the stop back behind the 20-day moving average. Plenty more downside in this pair. You can see my target is 80. The big fundamentals are not turning around anytime soon. Right, let's have a quick look at NZD CAD and just make a quick point in relation to both pairs. So let's shift over to that chart. Right, NZD CAD. This one isn't doing quite as well as the other one. It's about 200 pips, but both pairs are going down. Well, I've just made that clear, I think, when I was doing AUD CAD, but both pairs are going down. We've done both because we can't decide which is going to go down the quickest. So we've just done both and we're treating as one trade effectively. Now, in terms of this one, I think it looks really attractive in terms of, okay, we come off the lows, but break of this spike candle here, 84, 70, pop the stock back behind the 20-day moving average. Or again, if we rally up towards it, basically you can come off the 20 or this 87 level. Okay, so sell a rally or a break lower. I've got a target here of 83.30, which I need to extend actually, because that's basically only about, what is it, 250 odd pips away. I actually think it's going down to the next monthly level, which is 75, which is another 500 pips. So this one worked quite well so far, not as well as the other one. Why don't traders normally trade in this way? The vast majority don't. I think a lot of traders get too obsessed with the technicals. The technicals only have context against the sentiment and the big fundamentals. Okay, big fundamentals are going to rule the big long-term trends, and the more clear-cut they are, the less the sentiment spikes are going to be. Corrections of overbought and oversold. And now for me, it's very sort of a simple way of trading. You don't actually having to look at individual bits of data or anything like that. You're just doing a kind of broad view, which anyone can do. And then your technicals are very simple. And as you can see, it has caught us, these two nice trends. The USD SGD is doing okay as well. All three have got more potential, a lot more in our view. So I know it's a simple trend following strategy, but I really like it, and anyone can do it. Right, anything else I need to add? Nope, I think that is it. That is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.